the composition of the banking deposits, which was around 61% fixed deposit, has moved to 64%, which is a very significant movement. It could be that it is easy to move savings bank money into the fixed deposit online, very easy, not necessary to go to the bank, or people want to lock in the rates of interest when the interest rates are coming down.
Indian banking system is the best of health. Getting into the numbers, it's never ever net NPA was so little. Some of the banks are, even public sector banks are less than 50 basis point net NPA. All the large banks, both private and public, is about 40, 45 basis point, less than 50 basis point NPA. Capital, all are well capitalized. That's your side of the story. Corporate India also is not over leveraged at all. They are very slim and trim and all. But still, credit is not picking up. What is wrong? I was going through the, RBI comes out with the details about the sectoral credit. And can anybody guess where exactly credit picking up? The latest number says that the only area where the substantial growth in credit uptake is gold loan, 100% plus. If you leave that out, banks loan to NBFCs, to corporates, to MSMEs, to SMEs, to agriculture, everything is down. So, sir, what is wrong? Is it something wrong with the other side, or you are overcautious, risk averse? What's the problem?
Tamalda, good morning. Good morning to everyone. Thank you for giving this opportunity. Last year around this time, as soon as I took over as chairman of SBI, BS Summit was the first public appearance I've had. It's always a pleasure to come back here. The second thing, before I answer your question, all uncomfortable questions are comfortably answered by Secretary. So I have only business questions to answer. Obviously, Tamal had picked up the right question in terms of credit. First of all, sir, thank you very much for the kind words which you have mentioned about the public sector banking performance as well as public sector management performance. I hope that our March reports all will be good. Now that you have endorsed publicly, you can't go back. So this second point, of course, is the twin balance sheet problem we had. Today we are talking about the twin balance sheet advantage. Secretary also mentioned in terms of corporate balance sheet being good, bank balance sheet being good. So where are we lacking in terms of the credit growth? First, let me tell you that we are not lacking in credit growth. If you see the RBI numbers, it's double-digit growth, reasonable credit growth in my view. The problem is on the sectoral credit growth, as Tamal mentioned, not necessarily that it's coming from gold loan. Gold loans constitute a very small percentage of the overall credit ecosystem. Two important things to notice is the first and foremost today, very significant growth which is happening in the MSME credit. And MSME credit growth rate is not on account of lack of opportunities elsewhere that we are lending to MSME. Today, there's a greater amount of confidence among the mainstream banks to lend to MSME because of the data availability, because of the clarity in terms of their business models. Today, the lot of banks and NBFCs are lending to MSMEs. The second important growth rate coming from agriculture. Secretary mentioned about MSME and agriculture. Both the sectors are witnessing around 16 to 17% annual growth rates. And the retail side, of course, mortgage growth rates is very good. And I personally believe that mortgages for any economy are very critical piece, because in the real estate sector, there are almost, on the residential sector alone, more than 200 different economic activities are interlinked to the mortgages. So the only thing what we are lacking now in the credit growth, I think we have been talking for the last 3 to 4 years on this, on the corporate credit growth. There are several reasons, if you permit me to say that. I think if you really, one data point I would like to give, if you see, there's a corporate credit growth of around 1 to 1.7%, but the equity raising by the corporates is almost 3x. That means non-banking sources are available to the corporates. I did mention earlier also in the past, today in the system, corporates have almost 13 to 14 trillion rupees cash lying with them. So obviously, if any capital expenditure is happening, they're going to use that cash first and come to the banking sector. So the economic activity of the capital expenditure on the private side cannot be mentioned by the conventional credit growth alone. I think we need to see from the capital formation. We definitely would like, the government as well as the banks would like as much private capital expenditure to come back. And there are several reasons again for that. I think most of the companies are able to operate at higher capacities now than what they used to go for brownfield expansion as soon as they reach 70, 75% capacity utilization. Today, technology enables them to operate at 90% capacity utilization. The second thing is that global disruptions, supply chain disruptions, tariff-related issues, they're all creating some amount of uncertainty in the minds of the people. But one thing which I'm very confident that the private capital expenditure will be coming back soon, the simple reason is that this is an economy which is built on the domestic consumption. As soon as the domestic consumption stability is visible to the people, I think private capital expenditure is likely to be there.
So capex will start. So that's the right side of the balance sheet. Now look at the left side. There are also problem. I mean, in hand on heart, every banker you speak over a cup of coffee, they says getting deposits is a big, big problem. For the first time, they are admitting that banking actually is a business of collecting money. That's more important. CASA is going down. Every quarter, everybody's CASA is going down. There are a lot of theories, financialization, etc. But at the end of the day, I'm not getting into M3 and all the economic theory. Money has to come to the banking system. But it is coming, but you are paying more in the form of CPs and CDs and all. And another responsibility also, sir, is there, that which the government's better cash management, just in time. All the float that you used to enjoy, now this gentleman does not allow you anymore. So what do you do? What do you do in the left-hand side of the balance sheet?
So the left-hand side of the balance sheets are structurally going to be different. I think it is irreversible in the sense that not only in terms of the better cash management by the Government of India, obviously that has definitely impacted the current account balances, which were mainly available for the banks and more so for the public sector banks. I'll come to the current account a little later.
That was free money.
I'll come to current account a little later.
On CASA bit, what is your
Yes. So structurally, the balance sheets of the banks will be undergoing change. I think we need to understand that. Just to give a comparison, globally, the balance sheets of the banks are built not by the deposits, by the market borrowings. Because much of the financialization which has happened in the developed economies, the money has moved away from the banking system to the other financial services. It could be equity markets or insurance, pension funds, fairly large markets in many of the developed countries. And the same financialization away from the banking savings are likely to happen in India also. Just to give you, again, a data point, we have had 1.6 times growth rate of bank deposits, whereas mutual funds are growing at 3x. Which means that there is a sense of asset allocation or the savings allocation among the savers. Whether the savers will completely move away from the banking deposits is unlikely. As the savings improve, the allocation becomes critical. Not that everyone is going to put every money what they save in the markets. So, but the flow to the bank deposits in the pure form probably will come down. And if you also see that CASA is not only getting impacted because the current account from the governments are coming down, savings, part of the savings is going to the market, part of the savings are also moving to the fixed deposits. If we have seen almost today the banking deposits.
Because what happened 10 years back, the bankers had a hard mentality. Whatever State Bank of India is doing, smaller banks, their ability to manage risk is very different, but they would do to be in the same league. But do you think there's a other side of it? Like now you're getting into all the M&A financing and others, relatively smaller banks also will follow, and we'll get into a sort of mess, or no, you're well prepared to seize the opportunity?
So first of all, I must compliment the regulator for coming out with 22 announcements.
And
in
you are one banker who've been pushing for M&A financing, if I'm not mistaken.
Yeah,
All
I'll come to
private
the M&A a little later. I think we must acknowledge with a round of applause the RBI has done in terms of a far-reaching, I called them as banking reforms 3.0. Of course, the governor underplayed saying that these are all something which structurally the banking sector needed, so we have announced. But I believe that their far-reaching impact, first and foremost, is that these announcements, particularly on the banking side, were a great faith of confidence, a trust of, great measure of confidence in the maturity of the banking system in India. M&A financing, for instance, shows that the regulator believes Indian banking system is ready for funding these transactions with maturity. There are guardrails. The draft guidelines also have put in some guardrails. Obviously, we will be further negotiating with the RBI that what kind of fine-tuning can be done the M&A financing. And it is also not true to assume that a significant capital from the bank capacity to lend will move to M&A financing. The overall market size of M&A financing is minuscule when compared to the more than 220 lakh crore credit system what we have. The primary aim of me, both as SBI chairman and IBA chairman, seeking approval for Indian banks to do M&A financing is to give a level playing field and confidence in our ability to apprise the transactions. I'm sure this is the first step in terms of enhancing the gamut of activities the banking system can do on the M&A side. But there are a host of other announcements. I think we need to focus on them and enable today the banking system is robust. And when the banking system is robust, what the regulator is trying to do is that enable the banks to do activities which they were not doing earlier, and also ensure that their capital buffers are maintained. Expected credit loss mechanism is being proposed, which means that we need to have to provide for early recognition of any stress, which means it's a combination of prudence and a combination of trust, which the regulator has
Thank you.
displayed.
I've been sitting in your chair. I'm sure you can't say anything else but this.
Not
Okay, you
necessarily,
have to-
Taman. I think we don't have to be cynical about this. It's true.
So this is 3.0 banking reforms from the RBI point of view. Now again, Finance Ministry has done a reforms 2.0. Why I'm saying 2.0? Because it did try in 2015, 10 years back. Now again it's kind that. What is the reform? Now private guys can come and one of your 4 MDs can become from private sector, and then other EDs also can become and all. So if I'm not mistaken, correct me wrong, in SBI's history, one SBI guy leaves, you don't call him back if it goes out and all. And this is completely different. So how banking sector managed that? Money part is a part. I mean, that's a question of getting the talent, whether I'm interested with the lesser money and all, that's a separate story. But how do the culture, etc., is it easy to go? This 2.0 reforms by ministry, will it be a success? Or like 10 years back, it happened just 2 instances and then closed. One of the gentlemen is sitting here. He was there. So anyway, sir, tell me.
So first of all, AKB, I blame, why did you not ask this question to secretary?
Okay.
So,
Anyway, sir.
but anyway, the light,
How
and the,
easy or difficult to digest? First one, you said with open arms, you are ready. But the second one, how easy or difficult to digest this
so
culture issue?
I answer this question in 2 parts. One
Sure,
in the
sir.
lighter vein and another on the serious note. In the lighter vein, we all among the public sector banks think that the private sector guys require good training, so they are being brought in here. So that is on the lighter side of it. The serious note, of course, is the maturity of public sector banks today. Secretary also alluded to it too. now there is absolutely no difference between public sector and private sector. It's more in terms of the ownership. If you really take out the ownership in terms of the product suites, in terms of the technology, in terms of the capability of people, I don't think there is any great difference. And if this is intended to facilitate a lateral movement, it's a good move. Culturally, yes, there are certain definitely challenges. The cultural challenge is not on account of that, these a different animal what they are going to deal with. It is because of the pay structures and incentive structures which need further attention from the government if they're really serious about bringing the private structure here. Obviously, the public sector pay structure is slightly inverted pyramid in the sense that you have large number of people getting paid very well when compared to the private sector. As you reach the top, I think the differential becomes much larger. So if government really wants to attract private talent, obviously this structure has to be looked at. But culture-wise, I think anybody coming to any new institution will have to reorient themselves to adjust to the cultural issues. So, you have written, Tamal, yourself have written a lot of things on the culture. I don't want to go into this. But I believe the attraction of anybody coming to the public sector, not necessarily the pay structure, and an ability to lead a large organization, learn from the large organizations in public sector. How much successful it would be, let's wait and watch.
Thanks, Sir. I think DFS Secretary is sitting and got your message. But tell me, on the one hand, yes, this is a problem at the top end. You guys don't get much. I mean, it's a huge difference between a private sector CEO and all. But till the mid-senior level, your people are getting more than the private sector. And more importantly, their job also secured. So that actually gives you an advantage. You don't have to do much on the HR front, right? You can focus on business because people leaving at all those kind of things don't happen. Am I correct?
HR is not pay alone, of course, but a big motivation in public sector banks, not necessarily the good pay what we give. Obviously, the people are paid well thanks to the government and the management's approach towards taking care of the employees. But 2-3 things what we need to look at. Why the attrition levels are low in public sector banks? Like, for example, SBI has less than 0.5% attrition rate. Whereas in many banks, I think last time also I mentioned about the attrition rate in this forum. It's not pay alone. Today, I'll just give you the way we train our people. Most of them are taken from the colleges to a very competitive examination. In SBI alone, our training budget every year, training budget alone, not on the infrastructure, we spend about 550 crores on training the people. And train the people for the banking system, not necessarily for SBI. And every employee, on an average, goes through 60 hours of training in the bank, which means that you invest in your training the manpower, and more importantly, public sector banks give a variety of opportunities. In my career of 37 years, I must have done 20 different assignments. I don't think any private sector or any other organizations have capability or willingness to provide this kind of exposure. Right from the smallest branch to the largest branch in New York, I worked. This is an opportunity which public sector banks give. So from HR front, the attrition rates are lower, not necessarily because we pay well. That's an important element, of course. But we also take care of their training requirements and also create a sense of purpose for which they're working in an organization.
Absolutely. Sorry, sir. I'm just interrupting because Tanim is there. You have a few questions left. That's the reason. Yeah, I mean, we call it SBI is the blood bank for the banking system. Because whenever there is, I mean, I don't want to refer the names and all. We know how many of your colleagues, former colleagues, are running the show in multiple private banks. That is because of your training, your culture, and everything else that you stand for. So hats off to SBI. Just tell us, your scale, every 6 years, actually, you are becoming double. I was just going through the number between 2018 and 2024, you doubled your balance sheet. So how do you keep on doing this and the kind of investment? I mean, is it more investment on technology? And you are also some plan to taking overseas and all. What happened to that? Very quickly, because I have a few questions left.
Yes.
Just tell us, how do you keep on the scale? Because government is talking about more such SBIs, because you are the only entity within the 50, and that's ever since last 20 years, 25 years, we are seeing that among the top 20 level, among the top 50 by assets, only State Bank of India. Others are not there.
Yeah, thanks. I think operating at scale.
Quicker answer, sir.
Operating at scale is an important element for SBI. The doubling of the balance sheet, if the nominal GDP is at 10%, SBI always outperformed the nominal GDP rate. 10% means 2% you add, 2 to 3%. So with the compounding effect, SBI has the capability to double its balance sheet every 6 to 7 years. I think technology definitely has helped us. Digitalization has definitely helped us. Today, while we do not disclose our technology spends, I can tell you that we are the largest spenders on the technology today. And the digital platforms are robust, and we invest heavily into the backend technology so that the massive transactions volume, UPI alone, we do around 22 crores every day transactions. So the technology, digitalization, and reimagining the processes across the banking system, bank branches has helped us to handle these volumes on the scale. The second feature you mentioned about the YONO Global is an important platform, because while we operate in 29 different countries, our physical presence is limited. The outreach is mainly driven by the YONO Global. We are currently have launched YONO Global in 13 different geographies. So the volumes are going up. They are taking care of the account opening, remittances. I think we have a large scale adoption of YONO Global going forward.
So except talking about your subsidiaries, you have many subsidiaries, but at least two of them, say SBI Mutual Fund and SBI General Insurance. I mean, why aren't you listing them? I mean, it's not that creating value for your own entity. They're extremely valued, but actually checking the market, what's their value and all. But otherwise also, the value unlocking for the investors, adding quality to the stocks and all. Why not? When do you? Because you keep on saying that someday dekha jayega. Where? Is there any plan of taking the subsidiaries to the market? No. At least these two. SBI caps at some point of time, many years back, people used to talk that. And there have been instances where even an investment banking has gone into market but subsequently delisted. No, I'm not. But SBI MF and SBI General Insurance, why not?
No, these two subsidiaries definitely will be listed. Timing is something which I cannot take the guess, but these are good entities. As you mentioned, these two companies do not require capital at this juncture, but we will definitely be accessing the market on these two subsidiaries, particularly to create an opportunity for general shareholders to come into this very, very valuable subsidiaries of SBI.
We'll do that. We have 4 minutes left. I have a few, with your permission, I'll have a rapid fire with you. But before that, 1 or 2 questions quickly, because rapid fire will take just 2 minutes. Any question to sir? Mr. Anand Rathi, sir, just quickly. Sir, just tell the world who are you, because we know that everybody may not. And very quick, sir, very quick question, no
yes,
comment.
Sir. I want to talk about capital markets, sir. Today, in the growth of the economy, capital markets are playing very important role. And you have taken initiative to expand your exposure to the capital markets. My submission is that the entire banking system, today the risk in capital markets are far lower than what it used to be. But the perception still continues. As a result, the risk weightage of capital markets is still higher. So we need obviously that to be looked into by you, by the regulators, by the government. And how can we help capital markets to grow, because that's going to help the long-term growth of the country. Thank you, sir.
Absolutely. I think the capital markets and the whole ecosystem in the capital markets play an important role. And for instance, we have adequate room in terms of exposure to the capital markets. And if you have seen the 22 banking reforms which we spoke about, A few of them are aimed at engaging the banks into the capital market lending, and SBI is committed to support this capital market participants.
Thank you, Citizen. Anybody else? Anybody else? If it's not, so I'm just going to rapid fire. 2 minutes, 25 seconds is there and also. Very brief answer. You can even say no and all. And don't say that I'm stalking you and all. I'm just certain things and all, probably not in public domain. I just heard you were leading a South Africa, a delegation in South Africa, in Johannesburg. HSBC was hosting you. And then suddenly someone from HSBC Global asked, gentlemen, you are a graduate, agriculture graduate. I mean, how can you heading India's largest bank? What's the key to head that?
No, that's.
It's a rapid fire, fast.
Yeah. So the question is simple. I think that's the beauty of public sector banks, that nobody's ever asked in 37 years what is my degree or what educational background I come from. I think a round of applause for the public banking system in the country.
So that's an advantage for you, or that's a handicap for you?
Absolutely no handicap there.
Sir, no offense intended. Many of SBI cadre, I mean, you also, you tried for IS thrice. Thrice you tried, you did not get it. And now you are bank chairman. So do you regret, or you are feeling better here? Tell us.
It's a very tough question in front of the secretary.
You could have been his colleague.
Yeah.
So tell us, sir.
The answer has come from, but I think it's a great opportunity. No moment of regret, absolutely none.
When did you know or got the inkling or tell your wife that I could become the chairman? When was it?
Tamal, you asked me this question last time also.
Tell me.
So I have no answer for
That
this.
was a separate forum. Tell me, sir.
I think in public sector banking system, particularly in SBI, nobody can ever say that when he is going to become chairman. But definitely, once you become MD and you have some years left, you obviously believe that you have a chance at it.
Extension of that, how does actually one get the job? What does one need to become the SBI chairman? Because you have 2.55 lakh employees, right? So one of them only can become chairman. So how does one get? Quick
It's not
answer.
only about SBI chairman. I think for every aspirant who are already heading companies or likely to head the companies, I think just invest in your current job. Don't look for the next one.
Okay.
I keep telling this, invest in your current job and it will take you forward.
What drives you? You are in a large bungalow, probably one of the most expensive bungalow in India. You live it, but that you can't eat that. Money is not there. But what drives you? Is the pride, or is doing for the nation? What is the thing? Quickly.
So I think most of the public sector banks people, once they reach top executive grade, what we call DGM and above, they start thinking in a different manner. What is that they can additionally do? There are two reasons. I think one is, of course, you start feeling the sense of purpose. And in another way, it's too late to shift the jobs, right, after 20 years. So I think pragmatically, because we are lifetimers, we do not look at that what am I getting out of this. We feel obliged, we feel responsible that we need to do something for the organization.
I'm just coming to the end almost. What was the biggest challenge that you faced in your career? Biggest challenge you faced?
So I think the challenge for public sector banks, particularly
you at a personal level.
It's very difficult to say, but I think as the challenge of being chairman of SBI is a real challenge. The multitude of stakeholders which you have to deal with, if I have to really put it, I think that's the biggest challenge.
Sir, you are the country's largest bank. You are doing a phenomenal job. But tell me one area where it needs improvement. At least one area which needs improvement. In SBI, not in the banking system. Is it customer service or?
Absolutely, customer service. It's not that it's not bad. It's not good. But I think it's a area which needs constant focus and improvement.